Welcome to Goat Funded Trader. If you've ever wondered how to pass a prop firm challenge, specifically the first step evaluation with just a few high quality trades, then you're in the right place. In this video, I'll be breaking down exactly how I passed my first step $100,000 Goat Funded Trader account within just 3 trade setups. I'll be showing you the exact step-by-step process, my exact entries and exits, and the logic behind every move so you can use these insights to help you pass your own funded account and get funded faster. Before we dive in, if you're looking for a prop firm that actually pays out, supports their traders and allows you to scale up to $2 million, Goat Funded Trader is hands down the best in the business. They've paid out over $11 million to traders just like you, and their customer support service is next level. Check the link in the description to get started or to learn more. As you can see, I am on the official Goat Funded Trader website, and this is the exact account which I purchased and passed. It was the one-step 100k challenge, which was only $370. This required me to make 10% on the account to pass. I enjoy one-step challenges because they allow me to just pass the account within one step rather than going through multiple phases. They give you a daily drawdown of 4%, which is very generous on a one-step account, and a maximum drawdown of 6%, which is all I need for my trading. You also get a one-time 100% refundable fee on your account at payout. Let's get into trade number 1. On this day, I was monitoring the USDCHF, and I always start off on the higher time frames and do top-down analysis and work my way onto the lower time frames to actually confirm a trade setup. So on the higher time frame, I'm trying to establish what the current direction of the market is and to identify what the current higher time frame intention is, meaning what is the most logical place for price to head next on this higher time frame. And then I build further upon this on my lower time frames to actually confirm a trade setup. So on the daily time frame, what we can see is price was making a series of lower lows, lower highs, and lower lows. We were getting breaks of structure onto the downside, confirming a downtrend. But what we could recently see is price had plotted in a lower low and started to pull back into supply. We then get a strong reaction to that supply, which brings us back into the extreme of demand, and we actually start to get a strong bullish reaction to this demand zone. So this could suggest long, as we have just tapped into a higher time frame demand zone. So our lower time frames will obviously get a strong bullish reaction to this zone. So therefore, we go onto our lower time frame to see what the current order flow is, meaning what is the current direction on our lower time frame. So as you can see on the hourly chart here, is once price actually tapped into our higher time frame daily demand zone, we get a strong impulsive move onto the upside, which actually causes a 1-hour order flow shift. So our 1-hour market structure has shifted from bearish to now bullish. And then what we can see is price then accumulates, does a tiny little pullback, and expands up onto the upside, creating a high. So therefore, I go onto the 15 minutes, go even further onto a lower time frame to check the current direction of the 15-minute. And I'm basically just trying to align my time frames here. I'm trying to align my 15-minute with my hourly with my higher time frames to all basically tell me the same thing. So on the 15-minute, what we could see is we actually get this pullback and then an impulsive move onto the upside where we fill in a higher high. And this gives us a 15-minute break of structure on the left here. This allows me to now mark up my 15-minute lower time frame trading range, which would be from this low to this higher high. And then that also allows me to identify my optimal trade entry within this trading range, which is at the 0.705/0.79 on the Fibonacci retracement. And what we can see is I only trade London kill zone or New York kill zone. So in the morning, I'm looking for the same setup every day. And during London, on a classical buy day, what we would ideally like to see is Asia range lows swept. So the sell stop liquidity resting at Asia range lows swept first, with Asia range highs, the buy stop liquidity resting above to actually target and act as a draw on liquidity. So we have a clear target and a clear reason for price to actually move in our direction. So as you can see, during the London session, we actually sweep Asia lows. If we just go onto the lower time frame, you will see it a lot more clearer here. As you can see, I use this indicator which highlights the accumulation of the Asia session, which automatically highlight my Asia range highs and my Asia range lows, which are key levels of time-based liquidity. And as you can see, during the London session, we actually sweep that key level of time-based liquidity, the sell stop liquidity, leaving the opposing end of that liquidity resting above, which is the buy stop liquidity. And this will be acting as a magnet for price and will be drawing it onto the upside. So all we want to see now is our 5-minute to actually align with our hourly. So we would like to see another order flow shift in favor of this trade. So we'd like to see a bullish order flow shift. So as you can see, we run Asia lows, that then causes a strong distribution onto the upside, and we actually get a nice order flow shift. As you can see, we have a lower low form here, we pull back, we create a lower high, we expand down, create a lower low on the 5-minute, but then we get an impulsive move onto the upside and actually invalidate that 5-minute lower high, giving us an order flow shift. This then confirmed my trade entry, and I was happy to take the trade setup from the newly created demand zone or newly created fair value gap, as you can see here, and I had my entry entry at the open of this fair value gap and my stop loss covering the low and my take profit at the high, Asia range highs. I gave my stop loss just a bit more breathing room, I think, on this trade. Yeah, just below the 15-minute POI. It was around there. And if we just play price, as you can see, we get a lovely strong reaction to that zone and price heads straight to our target as we have the opposing end of that liquidity drawing price onto the upside. So this Asia range buy stop liquidity was acting as a magnet. And as you can see, price rockets onto the upside and achieves our take profit within a few hours. This trade setup achieved me 2.99% on my 100k first step funded account, which was a great start to this challenge and allowed me to start it with momentum and continue on to actually pass the challenge. I always believe when you start off the challenge with momentum and consistently keep that momentum flowing, you always have a higher chance of passing your challenges. Quick reminder, Goat Funded Trader is one of the most trusted prop firms out there. In November alone, they paid out over $1 million to their traders and their customer support team is always there when you need them. If you are looking to scale up and get real payout, check them out. The link is below. Now, let's look at trade number 2. Now, again, I was monitoring the USDCHF as this is a pair that I love to trade. And again, I start off on the higher timeframes, do my top-down analysis and work my way onto them lower timeframes to confirm a setup. So again, on the higher timeframes, I'm trying to identify the current direction of the market and then also trying to understand what the current higher timeframe intention is, meaning what is the most logical place for price to head next on the higher timeframe. And then I will build upon this on my lower timeframe to confirm a trade setup. So again, the USDCHF, it is the same chart as last time. We can clearly see the market is in a downwards trend as we were making a series of lower lows, lower highs and lower lows on our daily chart. But what we could also see is price had recently reacted to the extreme of the demand zone, which had caused a large rally onto the upside, and we can clearly see there's a lot of buying momentum present in the market at the moment. So from this actual chart, I was fairly neutral with my bias as I could see we were coming back into supply, but I could also see there was a lot of bullish momentum present in the market. So therefore I had to use my lower time frame to confirm the trade setup further, and this is where I use key liquidity points to help me identify whether the market will move onto the upside or onto the downside for that specific day. So what we could actually see when we go into the hourly here is that we actually had the previous daily low swept, which is a significant level of liquidity as there are a lot of resting orders below this level. And obviously when the market sweeps all of them orders, that's going to cause a reaction in the opposing direction. And what you can also see is we have a previous daily high left intact, which is a ton of buy stop liquidity resting above, which will be acting as a drawing liquidity and drawing price onto the upside. So therefore I was now interested in longs due to the significant level, the previous daily low being swept and the previous daily high being left intact. And then also again, if you remember from the previous trade, I used the Asia range highs and the Asia range lows. And on an ideal classical buy day, we get the Asia range lows swept first, with Asia range highs acting as a magnet drawing price onto the upside. And on this specific day, as you can see, Asia range lows were swept first. And you'll see that more in detail on the lower time frame. But as you can see, we mitigated into an hourly bullish fair value gap, which has caused a significant reaction, and we swept a key level of time-based liquidity being Asia range lows. So again, we're just looking for our lower time frame now to shift bullish and actually confirm a trade idea away from this fair value gap. Because if price just kept on declining and respecting these supplies, then I would not look for a trade entry. But due to the fact we got a nice, strong, impulsive move onto the upside like this, we can clearly see buyers have stepped into the market at this fair value gap and took control of the market. We can then see we get our 5-minute order flow shift, and we can see that we have actually shifted now bullish, further confirming our bullish trade idea. And you can see you get that final break structure into the fair value gap on the 5-minute here before we react with that fair value gap, and we get an impulsive move onto the upside, which causes a 5-minute order flow shift. And then what we see is price pulls back into a bullish fair value gap and then has another rally onto the upside, creating a new higher high, giving us a break of structure, further confirming our bullish trade idea. So we can now see that our 5-minute has fully been confirmed bullish after the break of structure after the order flow shift. Because remember guys, an order flow shift is only an indication of a trend change. The break of structure after that order flow shift actually confirms the actual trend change. And then as you can see, price once again respects demand and rallies onto the upside and then creates another demand zone below. And then this is where I start to get ready for my trade entry, and I then mark up the newly created demand zone and then mark up my Fibonacci trading range on the 5-minute, which gives me my optimal trade entry. And then I I simply waited for a pullback, as I could clearly see we hadn't yet swept the previous daily high. So therefore I was expecting price to move further onto the upside, sweep that previous daily high. So therefore I was interested in buying this market. So now, as I said, we just wait for a pullback, and once price started to pull back, I entered at this demand zone here with my stop loss just outside of the zone, and my TP was at that previous daily high, as you can see, for a 3.2R trade setup, so another 3% basically. And if we just play price now, you will see we get a nice reaction to my demand, and then that previous daily high is acting as a magnet, drawing price onto the upside, and my final take profit was achieved, banking me 3.2% on the 100k first step challenge. So again, we were carrying on that momentum. Now we are very close to passing the challenge. After this, I was feeling highly confident, which is always good when you are actually taking a prop firm evaluation, and I was ready for the next trade setup. So now to pass my first step evaluation, so after achieving 2.99% on my first setup and a further 3.2% on the second setup, I now only need to make 4% to pass this first step evaluation account, and then I will get my 100k funded account. Honestly, I've tried a lot of prop firms, but Goat Funded Trader stands out for their transparency, their fast payouts, and a real community. If you are serious about scaling up, this is the platform to do it. Finally, trade number 3. Now for this trade, I was monitoring the Great British Pound Japanese Yen, as this is another pair which I actually trade. Now I only trade 1 to 3 pairs, as I believe this has helped me become a lot more consistent in the long run. As when I used to try and trade multiple pairs, I was trying to monitor way too many charts, and I just couldn't simply keep up with it. So with the Great British Japanese Yen, what we could see is the market was having expansions onto the upside, and we were creating a series of higher highs and higher lows, higher highs and higher lows. So we can now identify the current direction of the market as bullish. And then what we can also see is that recently we actually plotted in a higher high after a large expansion onto the upside on the daily here, which could suggest we are now due a pullback. So now the current higher time frame intention could be that price needs to pull back into discount before continuing onto the upside, as we are now in premium pricing. So although we are in a bullish trend on the daily time frame, I would not feel comfortable actually buying in this yet, as we are not in the discounted price zones. We are actually now in premium, which makes it more high probability for sells at the moment. So therefore, I would like to go on to my lower time frame and confirm an order flow shift on the lower time frame to actually see if the market has begun a higher time frame pullback. And we do this by identifying our substructure. And as you can see, I come onto the hourly chart here, and what we can see is the price was bullish, and we've got a higher high formed here, and we can just drag this down here, and then we pull back from that higher high. As you can see, we pull back, we create this low, and then from there we expand up and create a new higher high, giving us a break of structure on our hourly time frame. So I now mark up my most recent break of structure on this hourly time frame, which as you can see is here on the higher high being broken. So as we can see on the hourly chart, price was bullish as we was making higher highs, and then we pull back here, we create a higher low, and then from this higher low we have another expansion onto the upside where we plot in another higher high, and then from there we actually see the market expand down and actually create a lower low, which is bearish structure, which is against that higher time frame overall trend. So our substructure has now formed as we have had a 1 hour order flow shift, as you can see here, as this demand zone broke. So this was actually our indication that actual buyers have now lost control of the market, and that supply is starting to take control, and we are now in a lower time frame pullback phase. So we could now potentially look at short-term shorts down into discount or down to a key level of liquidity before actually looking for longs back up with the higher time frame overall trend. So as you can see, supply is along the top. Now we're going to have to zoom in now and get very detailed, as we used candle range theory for this setup, and I didn't use any lower time frame confirmations from the supply, and that's simply due to the fact that this high was a strong high, as it invalidated the previous higher low and gave us our order flow shift and caused our demand zone to actually fail. So therefore I was not anticipating for price to break out of this supply, because this was a strong high. So theoretically speaking, the market should not close above this high. And as we can see, this supply on the left had already been mitigated and used, and this was the only supply left for the market to mitigate, and therefore I was happy to take the trade entry from this supply zone. But also I waited for a very specific detail to happen, and as you can see here, we look at the previous 3 candlesticks. We have 2 bearish candlesticks and then a bullish candlestick, and as you can see, we can mark up the high of the 1 hour candlestick here, the bullish candlestick, and we can also mark markup below of that candlestick, as these will be acting now as liquidity points, as the candle range theory suggests that once the high will be swept, there will be a lot of buy stop liquidity being swept within that process, and then the low of that candlestick will have sell stop liquidity resting below, which will be acting as a draw on liquidity, drawing price onto the downside. And then also what we can see is with our key levels of liquidity, we have a previous daily high. I actually executed this trade on Friday the 12th of December. As you can see, the previous daily high was Thursday the 11th of December, just here, and as you can see, we swept that, which will cause a significant reaction, as we've just swept a ton of orders resting at this significant level. And then we have the previous daily low left intact below, which is our target favor. So now I was just waiting for a sweep of this candlestick high, and then I would enter the trade. Once I seen this sweep of the high, as you can see there, I was tapped into my trade entry, and as you can see, we get a very significant reaction and price starts to melt in our favor. And my stop loss was just outside of this zone with my TP at the previous daily low. My stop loss would have had a bit more breathing room than that because my setup was a 4.4%, so it was around here. And as you can see, we swept that hourly candle high, and then that low of the candlestick draws price onto the downside. And then we also have the previous daily low acting as a magnet, and as you can see, price hit our TP, and straight from our TP it reversed in the opposite direction. So as you can see, we were very, very precise with this TP here. This is the power of liquidity and the power of using previous daily lows and previous daily highs. This trade sealed the deal, hitting my profit target and passing my first step challenge in just 3 trades. So that's exactly how I passed my first step evaluation at Goat Funded Trader within just 3 trades. If you want to see more breakdowns, live trades and payout proof, make sure you subscribe and hit the bell below. If you had to pass a prop firm challenge in just 1 trade, what setup would you look for? Drop your answer in the comments below. I'll be reading and replying to every single one. If you are ready to get funded, check out Goat Funded Trader using the link below. Thanks for watching, and I'll see you in the next one.